The Construction Market Guide is designed to provide timely information to construction executives to help them attract, train, and retain the most highly skilled workforce possible, to understand input costs and the direction of those material prices so they can bid as competitively as possible, and to understand the broader economic environment so they can forecast and make solid decisions for their firm.
The U.S. economy had been growing at a 2.1% annual rate as measured by GDP, the gross domestic product of the U.S., and that's now expected to be a 5% contraction on an annual basis for this year. The construction unemployment rate had spiked. Now that companies are returning to work, getting back on jobs and projects, that has declined a bit, but it's still at a 12.7% rate. Unemployment claims had spiked again, as we said, but are now declining as people return to work and businesses reopen. Be interesting to see where the unemployment rate goes from here and where it finds its footing over the longer term. In terms of the materials costs and prices that are going as input costs into construction jobs, we see that oil prices have been all over the board with the fall off in demand. Oil prices plunged and are now starting to bounce back, still down over 29% over the last 12 months. Other prices have been more modest in terms of their fluctuation. Iron and steel prices down about 11% for the year over a 12-month period, and asphalt, paving mixtures, and concrete and lumber have seen modest increases of 3 and 4%. We saw a massive decline in retail sales as businesses shut down, and then a good spike back with a retail sales number that exceeded expectations here just recently, but we're still down just under 8%, 7.9% from really where we were on retail sales, which is important because the consumer drives roughly 70% of our economy here in the U.S. New housing starts had declined substantially and are now starting to bounce back as people are lured by extremely low interest rates and an attractive environment potentially if they have jobs to build new homes. And we see the interest rates here at substantially lower levels than they were a year ago, with the 10-year Treasury at around 0.7% or so. It's fluctuated a bit, was 0.66 here as of the date of this report. And we see that staying low, fluctuating a bit based on the direction of the economy and the infection rates across the country. The U.S. stock market, large companies have largely recovered. We saw a 38% decline and then a bounce back and some volatility since then. U.S. stocks, large companies are up 3.7% or so over the last 12 months. Real estate and small companies, though, remains down. The Russell 2000 Small Company Stock Index down 10% over the last 12 months, and real estate also down about 11% over the last 12 months as well. I think there's a bit of a disparity that we're seeing between large corporations and some of the most financially secure companies in the country and their performance, particularly companies in tech and in sectors that are not as affected by the coronavirus, and smaller businesses across the country. So we still have a lot of uncertainty, and it'll be interesting to see how things play out. We think now is a great time to review your investment portfolio, and we have some tools to help folks do that. We have a portfolio X-ray that will help look through any mutual funds or holdings that you might have at the underlying securities that are in there and provide a stress test to you to show you what would happen based on various election results, various pandemic outcomes with the coronavirus, and just help people understand how they're positioned, what they own, what your expenses are for your investments, to provide you with a good understanding of where you are so that you can make sound decisions moving forward. We also have that tool available for 401k plans at the corporate level, so we'd be happy to review your 401k plan and provide insight into the expenses and positioning of 401k assets for folks as well. So please reach out to us. If we can help you in these areas or help you plan for your business, we'd be happy to chat. Thanks.